Good day, everyone. This is Patrick from ECFX Code Trading System, and it's Saturday, the 30th of July, 2022, and it's the weekly technical analysis for spot gold and dollar yen for the first week of August. And let's begin with spot gold, but just a quick glance, you can see that spot gold has driven its recovery higher, with dollar yen retracing further lower. So the Japanese yen has been recovering and fighting back after long overdue retracement. All right, let's start with spot gold, where it has continued its recovery after Wednesday's Federal Reserve meeting, where Fed Chair Powell seemed to have calmed the markets, even with a 75 basis points rate hike as expected, a second in a row, up to 2.5% now. He has calmed the market somewhat by stating that they are now moving into a more data-dependent review instead of a forward guidance. So in the next round in September, I think they'll be taking a close look at the inflation figures to make sure that it's not pushing up any higher. And if not, then they're able to increase rate for the third time at 75 basis points if necessary. But they are willing to move up even higher to a 1 percentage point, depending on the data. So if the inflation does get even hotter, so they're still going to make sure that they take care of this inflation problem at all costs so far, and by front loading the interest rate hikes. So if the market or if the inflation does cool down, then they're able to, after the third round of 75 basis points, they're able to reduce their rates for the rest of the year to target 3.75% by then. So we'll see if in September whether they are going to slow down their high rate hikes or acceleration in their rate hikes. So if so, then they may be able to contain the inflation, and especially when the economy is moving into recession with 2 consecutive quarters now of negative growth. So that also fuel the other majors to push up higher on Thursday, with the advanced GDP figures coming in at minus 0.9%. And this has definitely helped spot gold to climb up above the 1750 figure now, and trying to reach 1775. If there's enough time next week, it could make a push all the way to the 150 swing low, where it broke down from, and that's at the daily 55 is coming down to that as well. And that's just at the 1796, 1797 area. Oh, sorry, that's at the 1787 area. And if you take a look at the weekly time frame, that's definitely a very strong bullish move for the week. So yes, it's likely on its way to retest the swing low, the 1787 area. So that's definitely a key target for next week. If it does spike higher, there's the 1800 just above that, another critical round figure. Okay, so that's the target there at the swing low. So this area at 1750 may be a interim support now. And of course, below that is 1700. Now we may be able to just move this into retracement mode and take a look at this swing move down, and it's trying to climb up back into the 50 pip area, which is just above the 1775. It's around the 1780 area. So let's mark this as 1780 now. Change that to a 0 round figure, and that aligns with the 50 pip. So along with the this swing low, let's not forget that area. Let's add the trend line here. It's at 1786.79. Okay. So between the 1780 and the 1787, that's the critical resistance zone. And this week, there's a number of US news with manufacturing and services PMIs, followed by the key one on Friday with the non-farm payroll report. So there'll be lots of volatility this coming week. That's okay. All right, so with Powell calming the market somewhat, and that allowed the US dollar to retrace lower and the stock markets to recover and stage a mini bullish rally with along with the earnings season. So we'll see how far that will last. And next week seems to be a critical one for the US dollar, and to see how far it's going to retrace. So let's switch over and take a look at the US dollar index, the DXY. Here's the DXY, US dollar index, and It has been struggling to break above the 107 to even test the resistance at this confluence of 2 fips. And on Wednesday, after the Federal Reserve announcement, that's where it has started to retrace lower, continue lower, and into the support level at this swing high with the 100 fib here. So that's a key support for last week. It seems that there could be further bearish continuation move into the 105 level. So we'll see if there is further bearish momentum, and this is the weekly time frame. Could very well just dip into the 105 area. Now, if we move this into a fib reversal, and you'll see that it did almost hit the 262 fib extension there, just slightly above the 109 level, and then dip back into the 100 swing high. So for now, let's leave it, move to a retracement level. Let's move this to a retracement level to see it has retraced back into the 62 fib, and it also could dip down just below the 105 into the daily 55 or into the 786 fib retracement as well. Let's leave this as the retracement area. I think we can remove this long-term fib for now and focus on this recent swing move up and then a retracement back down. And if we zoom into the 4-hour time frame as well, and on the Wednesday of the Federal Reserve announcement and press conference, that's where it tried to push up higher above the 107 and was rejected and fell all the way back into 106 and attempted to retrace back, but then continued to weaken till the Friday until the PCE price index came out, and it did try to recover, but then also again rejected from there. So it's back into the 62 fib retracement area. Okay. So this coming week, there is the non-farm payroll on the Friday. That's the key one for the week. And that will be the key support. Let's change this into this key support level now. 106, let's remove that for now and move this 107 into a resistance zone here along with the 38 fib. And of course, right above the at the 109, that's the key resistance. Okay. So this coming week, there's a number of other US news as well. So, but main one will be the non-farm payroll to watch out for. Let's move back to the other majors and follow up on their price action. All right, let's take a look at the US dollar against the Japanese yen, where the Japanese yen has finally started to recover at the expense of the US dollar, and especially on Thursday, with the advanced GDP coming in at negative 0.9, this with the economy showing that it's moving into recession for the, and it's a negative growth for the second consecutive week. So it's fallen lower back into this range, and it easily broke down and broke through this support level as well into the daily 55, and then into the 133 round figure. So there is opportunity for it to dip lower into this swing high at the 131 35 area. So just above this 131 round figure. So that's going to be a critical support level, and see whether it will hold or it's going to punch through to test the 130 round figure here. So for now, it's going to be interim resistance. And of course, this area is going to be more significant resistance as well at 135. Can move that out first. 140 is not in danger at the moment. And if we take a look at the weekly time frame, that's the bearish momentum there into the 133. So there could be further bearish momentum to drive it lower into the 131 area, just below this swing high. And let's also move this fib now to retracement mode. With this recent swing move higher, and then a retracement now back into the 50 fib area. So the next zone is still aligns with this swing high at the 62 fib. That's still at the 131.34. So that's still valid. And it's possible also as the swing low here, so that could provide a significant support. And I think remove this for now and leave the 135 as the interim resistance zone. And take this level out. As well as this level. Okay. So finally, the Japanese yen has able to recover after almost being hit up to 140. So we'll see if it's able to, whether the dollar yen is able to find support at 131 or at the key one at the 130. Let's see how far it's going to retrace lower. All right, so critical week for the US dollar and its correlated major pairs. So along with some major news from the US next week. So watch out for the volatility and especially on the Friday. All right. So do have a safe week and a good trading week, and cheers for now.